Hey, what's up, my friend?
So yeah, today's video it's a special report for March. What I'm gonna do is to share with you a few potential trading opportunities that I'm looking at in March, right? As well as to share with you a few important trading concepts that would help your trading. Sounds good? Then let's get started. So the first market that I want to look at is euro dollar. So you can see that euro dollar has been making lower highs consistently right into this area of support. So if you ask me, this over here around the 1135 level, somewhere about here, this could be a possible area to look for shorting opportunities, right? So you can see that this is an area of value where the price has retested the trend line once, twice, thrice, four times, and possibly a fifth time. So how I'm looking to time my entry is, again, by looking at the lower time frame. You can look at the 2-hour time frame and look at the price action of this market over here. So right now, I would say it's still too early to short. Why is that? Is because looking at this price action, right, you can see that the buyers are still in control on the 2-hour time frame. You have higher lows, higher lows, higher lows, and possibly this one over here. So let's wait, right, for the market to give us clue that the sellers have taken control before we establish a short position. So right now, we know one thing for a fact. Number one, the daily is in a downtrend. Okay? And number two, on the lower time frame, right, which is the 2-hour time frame that you're seeing right now, the market is in an uptrend. So what we have, right, is what traders call a conflict between time frame. One time frame is in an uptrend and the other is in a downtrend. So what do? Well, we wait for the time frames, the lower time frame, to be aligned with the higher time frame. So this increases, right, the odds, right, of the trade working out in your favor. So now the question is, when is the right time? When do you know, right, the lower time frame, right, is aligned with the higher time frame trend? So here's what I do, right? So let me just share with you. So as you can see, the 2-hour time frame right now, it's still in an uptrend. So when do you know an uptrend is coming to an end? When do you know that the sellers are coming in, right, to push the price lower? So again, simple basic price action stuff, right? Uptrend is a series of higher highs and higher lows. A downtrend is a series of lower highs and lower lows. So what you want to do is to wait for a series of lower high and lower low to form to tell you that hey, the sellers are possibly coming in, right, to take the price down lower. And that's where you see right now, if the lower time frame has this type of price action, we are now aligned with the higher time frame downtrend as well. So this really increased the odds of the trade, working out in your favor. So again, let me just hypothetically share with you what could happen. Of course, the market will not, behave the way I predicted. It can do anything it wants, but if it falls in line with the plan that I just shared with you, right, that would be a possible trade setup that I would take. So 2 hours time frame, let's say the market makes another retracement, establish another high. This time around, it gets a very strong pullback. Sellers came in, pushed the price lower. Then the buyers tried to stage another rally, right? But this time around, it couldn't even retest back these highs before it coming down lower towards this area of support. So if this happens and the market breaks, right, let's say breaks and close below this area of swing low support, I'll be looking to short this market, because right now at this point in time, you have a lower high and lower low, telling you that hey, this could be the start of a new downtrend on this lower time frame, 2-hour time frame, right? And on a daily time frame, you've seen earlier the trend, right, is towards the downside. So if this could happen, right, I'll be looking to take a short position on euro dollar towards the downside. So this is just one hypothetical scenario. In reality, right, there are many variations to it. So let me just share with you a few common variations as well. Market could spike up higher, down, up, forming a potential double top, come down, and then reverse from here. That's one possibility as well. Alternatively, the market could also form a triple top, right, testing it 3 times before it breaks down. That is another possibility as well. Or the market could form a price, what we call a descending triangle. You have lower highs into this area of support, and then it breaks down. Over here, let's say it breaks and closes below this area of support. That is another possibility as well. So what I'm trying to share is that, it's important to read the price action of the markets, right? So don't try to memorize chart patterns, specific price patterns, because there's just many variations to it, right? Understand price action, right? And whatever the market throws at you, if you can read the strength and weakness of the markets, right, you're good to go. Okay, so this is euro dollar trading setup that I want you to kind of pay attention for this coming week, right? That it could be a potential reversal at this 1135 area somewhere here. Moving on, okay, let's talk a little bit about a market that seems to have died out in recent months. Bitcoin. So Bitcoin, right, in 2018, right, was the big hoo-ha, market volatile, huge swings, so exciting, people buying Bitcoin, and now it's around the 3,800 price level and nobody's even talking about it anymore. But again, hey, as a trader, you don't pay attention to news, you read the price chart. And from what I'm seeing over here, right, Bitcoin, it's in a doldrum. How do you know that? Just pay attention to the range of these candles, right? It's all relatively small over here, all very small range candles. This tell you that there is really a lack of interest, in this market. And as a price action trader, right, you should know that when the market is quiet, when volatility is low, it means that something big is about to happen. Okay, when the market volatility is high, right, it means that there's a lot of participants in the market, right, swinging up and down. So usually when volatility is high, right, what usually happens is that the market would start to, get quiet because it's already so volatile right now. How much more volatile it can get, right? So chances are during a highly volatile period, right, the market is likely to transit into a low volatility period. So as you can see over here, this period over here, market is volatile. Just look at the range of the candles when it broke down. It's large. After which you go into this doldrum over here where the range of the candles is relatively small. And if you look back, right, before this huge spike in volatility, what was the market doing? What's the volatility like? Again, pretty much a doldrum, right, over here. Range of the candles relatively small. So can you see the pattern that's occurring? Volatility of the markets is never static. It always moves from a period of low volatility to high volatility, back to low, and then back to high. So that's how the market moves. So anyway, back to the charts, right? So that was a little bit of a info for those of you who are unaware. Right now, I'm seeing that Bitcoin seems to be forming a possible bottoming pattern, right? You can see that this is a possible inverse head and shoulders pattern, although the right shoulder is a little bit longer, and I would draw this as the resistance or neckline. Okay, so Bitcoin right now, still, I'm not looking to trade this, but if the price can break and close above this area, right, bullishly, strongly, right, then there's a good chance that we could see a rally on Bitcoin, possibly retesting back this 6,000 price level over here. Okay, so this is from a trading standpoint, not an investing standpoint or whatsoever. Okay, so just sharing my thoughts on Bitcoin. Right now, the market is quiet, okay, and it could possibly break out towards the upside if it breaks above this area of resistance. And one thing to know is that when you're dealing right in trading, speculation, probabilities, anything is possible. So don't think that hey, the market once it breaks above here, it's guaranteed to move higher, because the market could just stage a false breakout, come down back lower, end up becoming a false breakout. So really, right, that's why we have stop loss in place to take us out of the trade if we are wrong. That's what your stops is for, right? To protect you. It's like insurance. You hate paying the premiums, but you're glad, right, when shit hits the fan, you have your insurance to cover you. Same thing for a stop loss. So that is for Bitcoin. Let's see what else I want to share with you. Copper. Okay, so copper over here, you can see that again, similar price action to Bitcoin. We have this down move over here. Then price went into a range. This is what I call a accumulation stage. Well, I didn't really call it, right? Veteran traders before me, they actually pretty much identified the 4 stages of the market. So this is what we call a accumulation stage, and then the price broke out of it. Over here, you can see price broke out of this area of resistance on copper. So right now, for those of you who are not in the trade, right, what I'm saying possibly is that there is a possible bull flag, or rather a trend continuation pattern forming over here. Notice that buyers were in control. They pushed the price up higher. Nice large range on the candles. And the pullback over here is relatively weak, right? Look at the range of the candles. It's quite small. Not as big as, this earlier up move over here. So what I'm looking at is if the price can break and close above this swing low, right, bullishly, there's a buy opportunity for me, right? At least for me, according to my trading plan, I'll be looking to buy, okay? Stops below this swing low, right? And in anticipation of higher prices to come. So this is something that you can look at, right? If you also trade trends like me, okay? So this is copper. So far we have spoken about euro, dollar, Bitcoin, and copper. So these are, I would say, 3 possible markets that you can look at for this coming week, or even weeks, depending how long it takes to unfold it, the price action take to unfold itself. So now, before I end of today's session, I just want to share with you one important concept, right? Which is what I call, entering from an area of value. So let me just share with you. So dollar against the Chinese yuan, you notice that this market is actually respecting this downward trend channel. So really, if you want, let's say, market is in a downtrend and you want to short, right? And looking at this point in time, right, I just want to share with you a lesson is that just because the market is in a downtrend, right, especially for a price action trader, it doesn't mean you go short immediately. No, you want to be trading from an area of value, okay? Or rather, to put it in other words, you want to find out where is the mean in the market, where does it tend to, come back as an area of value, and from there on, you put on a trade. So when you look at this chart, you notice that this market tends to, find area of value on this upward down, the higher portion of the downward trend channel, right? Correct? Tested once, twice, and there's a good chance it could come back and retest for a third time before heading down lower. So at this point, right, where the price is heading lower, many traders will look at this chart and say, wow, man, it's so bearish, right? Let me get short, right? Let me go short and, capture a piece of the move, right? Look how bearish it is. I'm sure, right, the market could, move a little bit in my favor. I mean, that's the thought process I had, right? The market, right, should give me something, correct? Well, in this case, it starts to retrace up higher. So you can see from a risk-reward perspective, if you were to go short, right, chasing the market down lower, where is the logical place to put a stop loss? It doesn't make sense to put it here, here, or even here, because it's all within the range of the trend channel. If you ask me, you should at least ideally get it above the highs of this channel, somewhere possibly about here. So you can see that from a risk to reward standpoint, your stop loss can be pretty large, right? If you were to be shorting near the lows of the channel. Instead, if you let the price come up higher, now you can see that, hey, if you were to go short somewhere here, your stop loss can just be somewhere about here. It's much more tighter, right? Offering you a much more favorable risk to reward. Okay, you don't have to endure the pain, right, when the retracement comes. I mean, you might have to endure the pain, right, if you get stopped out, but if you're entering near the end of the pullback, then the pain to endure, it's much lesser if the market does reverse back in your favor. Okay, so this is one concept that I want to share with you, right? Ask yourself, right, where is the area of value on the chart, and try to be trading from an area of value. So let me share with you another example. Euro yen. Okay, so same thing. Over here, notice that the market at this point, right, we can connect the lows over here. So this is like a upward trend line. So when the market breaks out again, many traders will think, man, breakout of, resistance. This is bullish. Let's buy. Okay? And is this from an area of value? Do you want to be trading from here? If you buy, let's say you buy over here, where's the logical place to put your stop loss? Well, you could put it somewhere below here, okay? But you can see that if the market does retest back this trend line, you're going to get stopped out, okay? So ideally, if you want to have a conservative level to set your stop loss where, the market would have difficulty going through the level, it should at least be below this trend line. And you can see that if you were to be buying here, stop loss somewhere here, it's a pretty darn large stop loss. So what do? Be patient and let the price come to you. So in this case, Euro Yen, again, right, it did come to you, right? And over here, looking for buying opportunities over here. I'm not saying, buy immediately on the bounce of the trend line. No. Again, you have to look for a valid trading setup of your own, right? And then look to buy, okay? But from an area of value perspective, right, over here, your risk to reward, right, the profile is much more favorable. You have a tighter stop loss, your stops can just go, below this area of below this trend line, which is about here, a tighter stop loss, and that, offers you a much more favorable risk to reward. Okay, so think about this concept. It's a very important concept, right? You don't want to be buying just because the market breaks out, because it's bullish, because you think that you can actually capture a small piece of the move. No, usually when you have that kind of thought, right? Usually when you think the market is breaking out, it's going to move huge, that's when it's going to be reversing or doing a pullback. Okay, so this is a lesson that I want to share with you. So just you can plot your support resistance, your trend line, trend channel, or moving average. Identify the area of value on your chart. Let the market come to you, right? And you find that you'll be, getting, much more higher probability trading setups. Okay, so this is an important lesson. I hope, it makes sense to you. One last thing before I go, right? If you've enjoyed this video over here, this special report for March, right? I actually publish a similar video like this every single week in what I call Pro Traders Age, right? You get weekly trade alerts, which is similar to this video you're watching over here. You get a backtest research lab where you can access the backtesting results that I've done over the over the financial markets. In the financial markets, you can get the results of it. You can get access to our trading community and much more. So if you're interested to be part of Pro Traders Edge, I will put the link below. You can check it out and see if it's for you. There's a free trial, 7-day trial, so make use of it. And if you don't like it, right, hey, there's no cost to you. Just just take the 7-day free trial. You don't like it, then hey, just cancel your subscription, and you won't be billed. So with that said, if you enjoyed this video, give me a thumbs up, subscribe to my YouTube channel, feedback, comments, just let me know below and I'll do my best to help. So with that said, I wish you good luck and good trading. I'll talk to you soon.